Hello, everyone, and welcome to our Smart Funding webinar, where we'll be discussing how startups can leverage analytics to attract investors and raise millions. My name is Farooq, and I will be your host for this session. Before we start, I want to emphasize that this webinar will be recorded for internal use, and I just wanted to make sure that you guys can see the slides. Can you guys see the slides? Yes, okay, great. Okay, so now some of you might be wondering why we chose this topic. Well, as we all know, funding is a crucial aspect of any startup, and the competition for investors' attention is tougher than ever. So if you're a startup founder or a part of a startup team, you know how challenging it can be to secure funding and make your product and stand out in the market, actually. So with the help of analytics, you can gain valuable insights into your target market, fine-tune your product. So can you guys see the slides actually, or is there any problem? I hope it's not. Okay. So whether you're a seasoned entrepreneur or just starting out, this webinar will provide you valuable insights and actionable tips that you can apply to your own startup journey. I'm excited to have you all here today. So let's just get started. So for today's agenda, is packed with valuable insights and case studies, starting with a quick and fun question game to test your knowledge of startup challenges. We will then move on to introducing our speaker, who will share his expertise on how to leverage analytics to raise funds for your startup. After that, we will listen to your challenges via a quick survey, followed by a case study on how Zid raised $2 million by leveraging analytics. And finally, we will have a Q&A session to answer any questions you may have. So sit back and relax and get ready to learn how to leverage analytics to take your startup to the next level. So without further ado, let's just start with our guest game, actually. So I'm going to drop a link for the game so that you can start playing the game and answering the questions so that we can dive into flow. I'm dropping the link to the chat section and we can start for the guessing game. Just drop the link to the chat. Make sure you see it and enter it. And I will be waiting for 2 minutes for you to done with your game. For those who just joined, we're just playing a game for 2 minutes to get into the flow and the higher up the energy. So I dropped a link to the chat so that you can play the game at first. Just one more minute to wait for you guys. So, okay. If everyone has done with the game, then we can continue with introducing our speaker. Okay, let me go through that slide. So Mr. Amr is a data science and analytics professional with over 10 years of experience delivering reporting, analytics, data visualization, and data science solutions in various industries, including telecom, healthcare, e-commerce, and sustainable technologies, just to name a few. And as the founder of New York-based data science analytics company, Mr. Amr has worked with clients ranging from Fortune 500 companies to early stage startups, with a proven record of identifying process improvement needs and providing actionable insights to clients and executive management. And he's passionate about using data science and machine learning applications to help businesses grow and scale. Mr. Amr has helped multiple companies raise funds and grow. This makes him the ideal candidate to share his insights on how to leverage analytics to raise funds for startups for this webinar. So without further ado, I'm welcoming the Mr. Amr and giving him the floor from now on.
Thank you, Farouk, and welcome everyone. So today, like Farouk said, we're going to be talking through a few things about how startups can leverage and use machine learning and analytics to grow, basically, right? So that's the main goal for any startup, is to gain traction, grow the business, and make sure that we are on the right track. So we're gonna talk first about a few aspects of what startups can do, and also a few aspects of the normal challenges that they see, and then we're gonna talk about one of the main areas is so what kind of data can we use, right? So what kind of data can we leverage and grow our business and drive our performance through? So that's one. And two, what cases can we use those data points for? And then three, we're going to talk a little bit about one of those cases, which is smart funding. And eventually we're going to walk into a case study and explore how that helped them, raise their seed funding. So let's go to first the common used platforms for startups. So startups usually can use a variety of platforms. There are two types of data basically that you can think about, right? One are your own platforms. If you're a tech startup, it's your own platforms data, so your product data, what your users are doing, what they're registering on your platform, et cetera, et cetera. So those are your own first party data, right? And then there are third-party data, and those third-party data points are like your CRM, for example, your analytics tools, your social media, your email automation. So any tool that you're actually using and leveraging, and then it's bringing you data that you can use. So registering your clients, your prospects on your CRM, that's one way to look at data points, right? Other things that you can think about is how you're reaching out to those people, right? So if you have a marketing automation, email automation tool that you're using, These are some data points that you can consider. Your financial systems, definitely a huge thing for startups, and so on and so forth. So any system, basically, just think about any system, any platform, any software that you're using, and think about it as a data source for you, right? Then comes the question of, okay, so now I know what my systems are. What are the decisions that I'm making to grow my business, right? So the key thing for any startup is, am I on the right track, right? Am I selling the right thing to the right person? Are they willing to pay for it? Why aren't they paying, right? Why aren't they subscribing? It's so awesome, so amazing. They should be, they should be throwing money at me to get my service or my product. And that usually isn't the case. So probing and understanding why it's not getting the traction that you thought it would, and then also thinking about how to make that happen, right? So that's basically what we tackle here, right? Is how to use those already existing systems to chart a plan, to chart a map for your growth, for your startup's growth. Some of the key elements, some of the key questions that can come, right, are usually around, first off, it's always around, funding. If you're raising funds, if you're not bootstrapping, how can I get my funds? How can I, convince investors that this is the right thing for them, that this is the right move, that this is something that they should be investing in, right? So this is one. Two, the other aspect is you can think of my competition. What are they doing? How am I tracking compared to my competition? Am I hiring the right person? Am I gaining the right talent? Am I retaining the right talent? That's always a huge thing, because for startups, you don't have the luxury of hiring over and over and over again. You just need a core team that can help you just get the right idea to the market and work on it. And when someone leaves, that's usually an issue in startups. Another aspect is customer acquisition. What is it taking me, right? And that's usually a miss, right, in startups. And we have to talk about this. This is something that can really help you understand the value of analytics here, is customer acquisition. If you do it in a data-driven way, it will help you, just attain a lot of focus, and also make sure that you're using your funds, you're using your scarce resources in the best manner. Managing cash flows is always also something that a lot of challenges come up with, because you're in the beginning, or even in a few months, in the first couple of years, even sometimes the cash in is not as fast as the cash out. Sorry, the other way around. If you have that problem, good for you. So if your cash out is faster than your cash in, you want to revisit your cash flows. You want to revisit your financial models, etc. And this is usually done in a data-driven way. So those are some of the main challenges that you can think about when you think about startups. Commonly ask questions, if you will. The other piece is, okay, so if I know this, and I know that I have data sources that can help me get those questions answered, the question becomes, okay, so what is the process here? What is the very simple, straightforward process that I can use? And I'm here to tell you, it's not rocket science, right? It is a rocket that will take you upwards, but it's not rocket science. Why? Because you have to first identify what the question is that you're trying to answer. Once you've identified the question, you know what data points you need to answer that question. Once you've identified the question itself, and you've identified the data points that you need for the question, you'll then you look into how you can get those data points from your systems. Are they already existent, or do you need to start tracking them? That's the next question for that. After you've pulled the data, after now having all the data points you need to get to that question and answer it, now you have to understand what kind of analyses you need to do, right? So, and this is a little bit of a technical piece, but you have to know what to look for, right? You have to think about ways to analyze data, ways to chart, projections, ways to like which analyses to use when and for what purpose, right? This is a little bit of a technical piece, but this is the crucial piece. Now, if you have everything, it's now like knowing what to do with what you already have, right? That's exactly what this is. Once you've done the analysis, it's now, a smooth sailing from there. It's taking decisions over and over and over and over again, depending on the inputs, right? So very simply put, you have to identify what decision you're trying to make. You have to identify what data sources you need for this. You pull the data in, you know what kind of analyses you need to do to make that decision. And then finally, you have an automated way of giving you that empowerment, that decision-making support that you need. So this is not going to be replacing you making the decision. It's just going to be giving you the right insights to make the right decision, right? That's very simply put. Now, I want to stop here and because before I move into the next phase, which is talking about one of the case studies or the idea of smart funding and then a case study for it, I want to make sure that you guys get a chance to tell us a little bit about what your challenges are. So if you can scan the QR code on the screen, or Farouk will also put the link in the chat for you guys. Just answer some questions about your startups, right? What's your thought process? Is it, are you seeing the same challenges we're seeing? Are you in the same area where, we've dealt with and we have been personally through, so that we can take those insights into account while we're going through the next phases of the webinar. So we'll give you guys a minute or so, and we'll come back to smart funding.
And actually, it can take 3 minutes or so, yeah.
All right, so 3 minutes it is. Thanks, Farouk. All right, I guess we can go ahead and continue. So the idea of smart funding stems from a very simple, equation here. You're trying to convince investors that this is where they need to put their money, right? That's the main goal. That if they put their money with you, they're gonna be as as profitable as possible. That's the smart thing to do. That's the right thing to do, right? How to get there, that's the question, right? And we're not here to talk about a full-fledged pitch training for startups or for those who are seeking funding, but we're talking here about one of the main elements, which is storytelling, right? You have your story, and your story usually is around why you're the right person for the idea, why the market needs your idea, and what is the growth opportunity in this idea, right? So you have to talk about your product definitely in your pitch. You have to talk about the market opportunity in your pitch, and you have to talk about the business plan that you have. What are you going to be doing with that money? And this is the piece that we're going to be focusing on. It's telling the story throughout the segments of, this is my product, this is what it's doing, and this is what it's done in the past, plus look at what it can do in the future. And this is, if you put your money with me, I've already proven that track record, and I can take it and go all the way to the moon and back, right? That's the main idea here. The story is, this is what I've done, and this is where I can go. Now, if we invest that much, we can do it a lot faster, or we can do it, in that timeline and expect that kind of return, et cetera, right? This is not something that you can do only using words. You have to have numbers for that. You have to have numbers. And usually startups, scrap and go and find numbers, and, it's a very cumbersome thing to go through everything just to get there. But if you're building a a system where you can actually have those insights at your fingertips whenever you're talking to investors over and over and over throughout your journey, throughout your process, you'll be able to actually develop it over time. Now, these are the things I need to show. These are the things that show that the return on your investment is a very high probability. We have a probability of success of 80%, with a confidence level of 95%, with all the projections that we have. So this is why we're confident in what we're doing, right? Now the question becomes, what kind of metrics do you have to use, right? Because not every metric is a good metric to show. And the example that's always given in that sense is, we call them vanity metrics. Vanity metrics are just show metrics. They don't really mean anything, or they don't really mean much. They're not monetizable. So if you look for a platform that broke the industry, it was probably Facebook when it came out, and everyone wanted to be the next Facebook. And when Facebook came out, everyone was throwing money into Facebook because it was the first platform to get that many users in that short span. It was a new concept, and people didn't really know what it meant to have that many users on a platform. They just knew that if you had that many users, that means that we can leverage that somehow in the future. But if you look at the business model, try to think about early Facebook when there was no ads, nothing. It's just a platform where you go in and you post something and you comment and like on people's posts, and that was it. Where's the money? How is Facebook making money there? You can't really make a case for a number of users or number of active users on a platform if they are not paying users, right? And that's what the industry started to realize moving forward, that we don't want people to come pitch to us, we have that many users. We need them to tell us, what are they making with that many users to make money? How much is a user contributing to our revenue, right? And that's the main idea here. And this is when Facebook, even Facebook and all the others started to shift towards revenue generating activities and revenue generating metrics. And the idea here is that whenever you're looking at your startup, whenever you're looking at your numbers, don't think about how can I showcase a huge number, but think about how can I showcase that this number actually matters for the growth of the business, for the growth of the revenue. So don't look at active users. Don't look at, if active users means that they are actually paying users, then look at subscribers, look at the number of of monthly paying customers, look at the number of don't look at, for example, the number of deals in the pipeline. That doesn't really mean a lot. Look at the numbers of deals that are being closed per month, per quarter, per year, etc. Right? So you have to look at numbers that actually matter. So don't look at vanity metrics. And if you need some clarity in that, we can definitely discuss that more. But the idea here is you have to focus on numbers that matter for growth, right? And if you focus on this, and if you make the right analyses with this, and if you tell the right story with that, it's going to be very, very compelling to investors. And that's exactly what we have here. So I'm going to talk now about the case study itself. The case study is Zid, and Zid is a Saudi Shopify, right? So they're pretty big now, but when we worked with them, it was way back when. So it was way back when they were starting. It was 2018, if I recall, 2017, 2018, maybe around that time, if I'm not mistaken. And Zid was just starting. They had their platform, in testing mode and beta mode in for maybe less than a year, if I recall correctly. And we were working with the founder, with one of the founders, and the whole story was, okay, let's look at what we have done so that we can actually tell people this is a good opportunity, right? This is where we can go. So the first thing we started with them was we started to look at their performance, their data, where their data is, and how we can grab this data, clean it, and make it reportable. That was the first task here. Like, where does the data sit, and then what kind of data points do you already have, right? Because we don't have the luxury of going and tracking new data, right? Well, and we did, although we did suggest a lot of those, throughout the project, but for what we were concerned with for the immediate ask, we needed to have an idea of what they currently have that we can tell a story with, right? To start with, we looked at what we currently have, and then we moved on to seeing, okay, so what does this mean in terms of your objectives, your key results? What were you trying to get to? Were you successful? Can we tell a story, even in retrospect, that you were successful in some way, right? Was there any breakthroughs that we can find through those data points that you had shown us? Were there any measures that were going in a certain trend, and there was a spike upwards, or a huge correction in path, or it's really going into a really good and great direction, right? And then the next phase to this is after we've focused on what were the objectives and what were the key results that we're able to provide the evidence that this objective was met. Now comes the idea of, okay, now let's tell a story for the future, right? So where were we successful, and where can we gain more success? And in that sense, we, it was the idea was mapping a growth strategy for them. But to do that, we had to say, okay, so we're going to look at these metrics, 1, 2, 3, 4. I think it was like 3 or 4 metrics that we focused on. And then we started doing segmentations, for example. So customer segmentation is a big thing, right? You need to know, where are you paying money and where are you getting money? So if you can plan this out, if you can tell that story, I've been paying money in these areas, and the ratio between my costs and my revenue was best for that segment, for that market segment, for that target segment, for that, customer segment, this is where I want to be, right? So my focus now, my growth strategy, my focus for my growth is this area where my revenue to cost ratio was the best, right? And that's the first element of the story here, right? Is that I've already seen that there is something that is great about what I've done before, right? And then you take that and you multiply it and you say, okay, so let's now run a projection model. Let's run a predictive model. Where can this take me if I invest more money, if I take this to, all the next levels? And for that, of course, you have to have the proper data. You have to have done some research. What is your addressable market size? All these things. But then you have to make that projection. You have to tell that story. I was successful in that sense over the past, 6 months, 12 months, 18 months, 2 years, 3 years, whatever it is. And if I focus on these segments, if I expand to those markets that look like this segment, if I, do these activities that will allow me to penetrate this market segment more, I can actually see a projection of revenue that looks like this. My KPIs here, my indicators for success are those very metrics that I am trying to tell them, I've done this before, right? This is what worked really well for me. And this is basically what rounds it up. Now, telling that story in that sense, saying, if I get this money, I will do 1, 2, 3, 4, 10. These are your activities. This is your business plan. That's good, right? But then taking it to that, the thread that just brings everything together in one place, which is your performance plus your projections in a data-driven way, in the most analytical way that you can design. This storyline is what actually is more compelling for investors when they see numbers, when they see this is your performance, and according to this performance, this is where you can go. And even for you as a business, as a business owner or as an entrepreneur, or even as a business manager, this is where you want to be, that you always want to say, okay, I can have confidence in the next quarter, in the next year, in the next 2 years, because I know what I've done in the past. I know what I can do in the future. And accordingly, this is my chart going forward, right? Just to put some also, additional colors to the story here. Whenever you dive into data, you'll find a lot of opportunities. It's not just what you're trying to do. You'll find a lot of extra things that that you can track. So, and in that sense, what we also, what we've found with Zit was there was a lot of opportunity when it came to the kind of data points that they had. One of them was, why don't you do customer facing analytics? And the customer facing analytics, they actually currently do it, and it's part of their premium tier. People pay money for it, all these things. So this is basically, another thing you can think about is, can you leverage analytics to make money, Can you leverage the data that you currently have to, have your clients have some value from it, and this value they're willing to pay for it? So that's another way to look at it, is that you're not just making your own life better, you're actually making your customers and your clients' lives better. And in that sense, if you're providing value, you can also ask for a share of that value. So those are basically the the top line points here regarding the smart funding mechanism that we're talking about. So just to wrap it up, there are three main areas in the pitching process that you might want to think about. One is what your product does. Two is where the market is, what's the opportunity there. And three, a proper business plan. And in that sense, the storyline, the thread of the storyline throughout it, if it's rooted in data, if you're telling the investors, this is my performance, this is how my product stacks against others, and this is how it performed, and then this is where the market is, this is our projections according to all the the addressable market sizing exercises that you might have done, all these things, and you add that to your predictive models, your projections. This is what my segment that I'm selling to, that segment that made me the most money in the past 6 months or so. If I focus on it, if I penetrate more, if I gain a larger market share of it, which is absolutely possible using my business plan, then we're going to get to that return on investment that you are shooting for. That's basically a very compelling storyline for an investor, and something that will help you and your investors get to where you want to be in the fastest way possible. So this is really at a very high level what we mean by smart funding and or smart fundraising for startups. And I think that's all my my contribution here, Farouk. So I'll hand it over back to you, and yeah, we can open for Q&A.
All right, thank you, Mr. Ram, for sharing your expertise with us today. We appreciate your time and insights. So at this point, we will stop the recording and transition into the Q&A session, as you said. And if you have any questions, please feel free to drop them in the chat section or directly ask them through your microphone, or just want to raise a hand. We have a question during the webinar from Haysam Erkot. I don't know if I spelled it true, but he said, could you please emphasize how data-driven can help in adjusting the cash flow? He asked this question in the Q&A session.
Okay. Thank you, Aitham. That's a great question. And to put it simply, right? Any question of having a problem, if we have a crisis somewhere, right? If we have not even a crisis, if we have a challenge, right? We have to have first what the root cause is. So we have to dive deep and see where are things going wrong and where can they be adjusted, right? Because the question of cash flow can have a lot to do with the question of the revenue structure and the cost structure, right? When are we paying and when are we getting paid? If our net at the end is really good, is in the positive, but our cash flow monthly is negative, then it's a matter of restructuring our expenses and restructuring our pricing, or not our pricing, but our financial models with our clients, right? So for example, let me give you just one simple example that we have actually gone through. So you see that your expenses for your delivery for an implementation goes really, really high in the very beginning of any project, but you've structured your the payments with the clients in for their benefit to be equally distributed amongst the months. Now, yes, while I understand that this is somehow, compelling for a client to, to sign, it's hurting you at the end of the day, right? So you either restructure the way that you're delivering so that the cost is distributed with what, with what you're paying, or you have to rethink about restructuring the financial model with the customer. That's just one aspect of it, but it always goes back to root cause. Is the root cause that the cost is higher in some areas, and then, or sometimes, is it seasonal? Is it not? Can you think about a way to restructure the cost? Can you think about a way to restructure the revenues? And these questions usually, they come when you look at the, in the grand scheme of things, when you look at an annual, P&L, an annual cash flow, an annual, balance sheet. You look and you see how the numbers are stacking on a monthly basis, and you're saying, okay, so let's break them down by accounts. Let's break them down by activities, by what is the cost element here, all these things. And this is a lot of financial planning basically that is involved. But the data-driven element of it is that you have to have a good, like a good metric for where you want your cash flow to be. The cash flow positive is just, a very simple one, but what is the percentage that you want to be at? What can't you go below? And then plan it from there. If you do it this way, you know where you want to be, and then you structure everything accordingly. That will help you. Another question will be, and this is a different discussion, of course, but another question can be, okay, so is what I'm providing for the clients worth the, the upfront, worth them fronting the cost for me so that I don't have to incur the cost? And that's an understandable question. And sometimes it actually differs from one market to the other, from one culture to the other. Do people feel okay, paying 50% upfront? Do people feel okay paying 20% upfront? Do people feel okay when it's just a monthly subscription and they're getting something, huge and something valuable? The question is, can you actually burn that cash upfront to get to that good business model that you want to be at? And this is the question, and this will bring you actually back to the question of, and I'm going on tangents, but because we're talking startups here, this will bring you to a huge other decision that you have to make. Do I want to bring in investors, or do I want to bootstrap? Do I want this to be 100% mine and grow it slow and steady all the way up? Or is it the right time, if I have a solid plan, but it means that I need $100,000 to get to a point where I'm launching, I'm delivering, I'm doing all these things, and I have the historical, evidence that I actually can deliver. I've been delivering on this, but to scale it, I need that kind of money to be able to burn that cash that is needed in the beginning, so that we can get to a point later on the contracts where we're just, we've done all the work in the beginning and we haven't, covered all the expenses through the revenue, but later on we won't be doing almost anything, and it's going to be all revenue, right? So it balances out throughout the engagement length, but you're asking the question of, am I getting to the right place in the right time? So if you're not getting to the right place in the right time, maybe you want to consider other options other than restructuring. It can be, raising funds. It can be looking into other partnership models, looking into other, other components that you can add to what you're offering so that you can increase the revenue streams, et cetera, et cetera. So it's usually quite the complex thing. And with startups is always as such, because you're talking about the survival of a newborn company, or a toddler, or something that needs a lot of support, and you're trying to think about every element of it without jeopardizing the rest, right? So you are talking about an organism with all its organs intact. You're not talking about cash flow, regardless of what the product is. No, the product is directly related to the cash flow. The cash flow is directly related to your customer success. Your customer success is related directly to your hiring the right talent and your networks, etc. So everything is connected. And I hope that I've touched base on some of the elements to answer that question.
All right. That was a great answer. And if you have any questions more, you can type it. And Haytham asked again, if you analyze a market as a data-driven business transformation company, how can you test the quality of the data and consequently the quality of the decisions made based on those data?
That's the $1 million question, right? So it's in data and in anything, you can't say garbage in, garbage out, right? So if you don't have good quality inputs, you won't have good quality outputs. The question of data quality has to have with three main things that you can think about, right? Can you actually can you compare this data point to anything else to validate it, right? So validation is one element. Two, can you benchmark? If you can't validate, if you don't have primary access to first party data, can you benchmark against something very similar, right? And three, if you can't really benchmark, can you test, right? So one is validation, two is benchmarking, three is testing. And testing is basically like sampling. So you're taking a big idea and you are starting it small, and you're testing, you're just running a pilot and seeing how things go. And I'm not talking about piloting your own service. I'm talking about if you're looking at the market research, well, the market research says that those people are interested in in buying tripods for their cameras, right? You want to go out and talk to a sample of that market that is representative of the population. This is a key element here, and they have to tell you, yes, we are interested in tripods for our cameras, but you have to do it in in an objective way. And I'm going on to tangents because we are talking about startups, but market research is a big thing. Product market fit exercises are big things. You have to consider how you're doing them so that you don't tell yourself a wrong story. And this is a very important element, because if you think, my first class, my first statistics class, like 15 or 17 years ago now, the professor said, and I remember this vividly because it was a really interesting thing. Like, in my mind, I was going to learn about statistics, how numbers can't lie. And he said there is a great book, I encourage everyone to read it, and it's called How to Lie with Statistics, right? So numbers are just tools that you can use to either tell the right story or to tell, a lie. As long as that you're not lying to yourselves or to your investors, because this is not the business that you're in. You're in the business of winning, right? And to be able to win, you have to be able to tell the right story. If you're telling the right story, if you're asking the right questions, if you're doing the right things, you will be able to tell the right story, and you'll be able to get to the right point. So back to the main point here, data quality means you have to do validations, you have to do benchmarking, you have to do testing, or the three, whatever you can do.
Righty. Any other questions, or we shall continue? Okay, then. Thank you all for joining us today to learn about raising funds for your startup via leveraging analytics. We hope you found the webinar insightful and informative. As a reminder, we are offering free limited slots for strategic data-driven discovery sessions, as you can see from the slide, which will demonstrate how data-driven transformation can improve your decision-making process and help you raise the funds you need to grow your startup. So to reserve your spot, simply use the QR code provided in the slide. So thank you again for joining us today, and we're looking forward to hearing you from soon. Yep, that's the wrap.
Thanks, Farouk. Thanks everyone for attending, and we'll be following up with the recording of the webinar and also the link to that session that will be available for 2 weeks, like Farouk said. So looking forward to speaking to you guys in the next 2 weeks. Take care and have a great day.